housing recession won't bring home prices down, at least according to this economist in this CNBC article. And he cites, this isn't a recession in home prices. A price decline on a nationwide basis is unlikely, according to Lawrence Yun, chief economist at NAR. And he says that is because demand for homes remains strong, primarily due to strong employment numbers and an inadequate supply of homes. Now, that's nationwide, but how does that look really when it comes to Arizona, specifically the Phoenix metro market? And that is what I'm gonna go over today. So if you are thinking about buying a home in Arizona, you might wanna pay attention to this video. There's some strong info here that you could use to make your decision. And if you're thinking about getting your home on the market, or it already is, you may find this information useful as well. Now, we all know real estate is hyper-local. What is going on in Chicago may not be the same in Phoenix, and we saw that with the strong appreciation we had in Phoenix, and we're seeing it with the strong amount of inventory we're getting. But before I get into the nitty-gritty, the numbers, going over the Cromford report and some of our most recent stats, I want to really touch on why this is good for buyers, in case some of you want to dip out of this video early. But if you are considering buying now, here's why it's good. Yes, the increase in interest rates, that really caused some buyers to pull back. I think that was one of the major reasons. But if you're thinking about buying now, there's a few reasons why it is good for you. So one, obviously there's more inventory. You got more homes to choose from, better products to choose from. You have more control. No longer are you having to go look at a home and rush to get your offer in. I had so many clients who wanted to put an offer in sight unseen, which I was not comfortable with. We had that often. We had people waiving appraisals. I heard of one client waiving an appraisal of like $300,000. It was not my client. And they did not even get the home. Waiving inspections, all sorts of crazy nonsense, and having multiple offers, and sellers really just putting any product out there, having it sold. And now with buyers, you can buy a home with a concession of selling yours. You can buy a home getting a seller concession. I have a client under contract right now. We have a $7,000 seller concession. That was not going to happen 6 months ago. Yes, rates are higher, but depending on where you're at financially, you can use that concession to buy down your rate, or you can understand, I can afford this rate today with the hope of refinancing later. But what it all comes down to is we are more balanced now than we were before. We weren't even close to balance, and buyers have more buying power. So yes, inventory is up. I think I've mentioned that in my last few videos. Right now, we are at the most amount of homes available, single family detached homes. That's really what I pay attention to, right at 16,000. Well, actually 15,997 as I looked a few minutes ago. But that's up a few hundred from when I looked earlier this morning. So right around 16,000. We haven't seen that number in a long time. Now, when we're looking at real numbers here, home sales are down. So they're down from last month. Not by much, but they are down. And absorption rate is up. Now, in the Cromford report, and this will be up on the screen, but the absorption rate, we're right around 3.1 months of inventory. Last month, that was 2.8. Last quarter, 1. A year ago, we were under a month of supply, which means if no more homes hit the market, it would take 3.1 months for those homes to all sell. Now, technically around 3 months, you're still in a seller's market. Once we start seeing 5, 6, then it becomes more of a buyer's, and then we start seeing beyond that, 9, 12, then we're in an area we don't necessarily want to be. But something to pay attention to is that absorption rate is going up. Now, how long will that continue? Will it continue on that trend for a while? Time will tell, but it is going up, and it's nothing that I want to avoid talking about. You have to pay attention to those things, and if you're a buyer in this market, again, this is good for you, and if you're a seller, it's good for you too, especially to understand how to position your home in the market to where it makes the most sense to choose your home over your neighbors. Now, when we look at, again, the Cromford report, the market index is almost balanced. We're at 107. Supply, we are at 74, and demand, we're at 79. So with demand, we're under 100 means demand is less. So before we were way up there. So we are definitely more in that balanced market, but it may not feel balanced. It may feel like it is a buyer's market just because of the extremes we were at before. Now, reverting back to that article where it says the recession isn't driving down prices, so we are seeing a slight price decline from the last month. So as of today, this month, last 30 days, $550,000 average. Last month, that was $555,000. So we've dropped down, and the last quarter, $598,000. Now when it comes to median, we're at $445,000, last month, $457,000, the last quarter, $475,000. But what I really want to look at is, yes, prices are dropping, but the value is already there from what we've experienced the last 24 to 30 months. Now, a year ago, that average was around $55,000 less, and the median was around $42,000 less. So yes, prices have dropped from last month and last quarter, but they're still well above where they were a year ago. Now let me know, do you think that we're gonna start seeing averages and medians back to what we saw a year ago or 2 years ago? So 2 years ago, that home that is $550,000 today, you would have paid $400,000 on average. So do you think we'll get back down to those levels? Personally, I do not. Now, whatever happens in the market happens, but just from what I'm seeing, I think it's going to take a lot to get there. Now, even with certain changes in the market, it does take time. And if we are to get there, I believe it's going to take a lot of time for things to happen, things to catch up. But that is a huge, huge drop. According to this economist, we're not doing that at all. But that's a lot of big changes. Another important fact and stat I like to look at is the days on market. So the homes that have sold, average days on market, it was on 38. Last month, it was at 32. And then last quarter, 28. So we've been hanging around that month mark. And yet we're a few days over, but the days on market for active is 56. Now that is up from last month by 9 days and up from 43 from last quarter. Now, out of the 16,000 homes for sale, give or take, and 19,000 total, homes that have been on the market for over 60 days is 6,300 homes. So out of the 19,000 total homes for sale, manufactured, attached, detached, 6,300 of them have been on the market for 60 days or longer. So, I'm not a mathematician, but a good chunk of them. So to me, that comes down to sellers who are still thinking it 6 months ago, not pricing their home and according to what the market dictates it's worth, causing it to sit on the home longer. And also, I mentioned this before my last video, there was some agents who, a lot of agents just got licensed in the last 12 to 18 months, and they maybe are not used to having those conversations and those price reduction, market adjustment questions with their sellers, and it's not taking place. So the market is not in agreement with their price, most likely, and that is what is gonna have to change, and some people are really gonna have to take a look at why it is they're moving. So that's why I mentioned at the beginning of the video, if you're a home seller, pay attention to this. So if you're thinking about selling your home, you really need to price it where it needs to be in according with the market, what the market dictates, because of the amount of inventory we are seeing hit the market now. And buyers, they have more options now. They don't have to settle for whatever it is that you're selling, which is, honestly, being in a balanced market is great. And speaking of homes that are priced too high, expired listings, those are homes that list on the market, don't sell, the contract with the listing agent expires, up 154% year over year and up 29% from last month. So that is something I pay attention to, price reductions, price changes. So expired listings getting back up there, but before you would see hardly any, and now I'm seeing every day more and more expired. So again, why it is important to get your home priced accordingly so you're not chasing that ball down the hill. And if you are a buyer and you're looking for that discount, tell your agent, let's look at those homes that are on the market for 60 days or longer, and we're gonna come in and we're gonna get concessions, we're gonna get lower price, because some people I think may start getting FOMO and want their home to sell. But it doesn't work in all cases, but I know for some of the buyers I've worked with, that has been a strategy that has worked out well for them. Now, I've mentioned before, I don't think there's going to be a crash. I could say there's going to be a crash in the next 10 years, and I'd be right eventually. What year is it going to be a crash? I don't know. So some people just say that year over year. In the last 6 years, I've heard it every year. Oh, the market's crashing, the market's crashing. I'm like, are you crazy? What makes you think that? But if you say it enough, eventually you're going to be right. Just say it's going to rain tomorrow. Well, not in Arizona, but eventually you say it every day, you're going to be right at some point. But there are going to be some things I think that put a constraint on homeowners, and it really doesn't have anything to do with the home itself, but the rising costs from your food. I know our grocery bill and our family of 4, it is insane. We saw what happened with gas prices when in Phoenix we were paying over $5 a gallon. Now that's dropped to just under 4. Your utilities, everything is costing more. So yes, your principal and interest may stay the same, but your taxes are going up. Probably your insurance is going up, and with high rental prices. And I just saw that Maricopa County had a 13-year high for eviction filings. So what's going to happen then? So say these people do get put out of their homes. Are those landlords going to be able to find new tenants? I don't think that's going to be a thing short term. We're seeing those properties owned by landlords hit the market, at least talking to my investor friends. But I mean, who knows? We'll see what happens there. And speaking of investors, an article that came out recently, it's all over, but Home Partners of America, it's actually one of my clients. They're a huge investor. They are owned by Blackstone, which is a billion-dollar company. And what Home Partners of America does is they purchase homes and they rent them out. So say you're looking to rent a home. I get you approved with Home Partners. You go look at a home. We submit it to Home Partners. Home Partners purchases the home for cash. They rent it back to you, and then you have the option to buy it. It's worked out really, really great for some clients who were stuck. They want to choose from certain rentals that didn't fit their criteria, and they wanted to get a nice home. But Home Partners of America just canceled 38 of the cities they were working with. Well, I say canceled, they halted purchasing. So out of the 80 markets they buy in, 38 of them, no more. So who knows if they will bring those back. But when I look at iBuyers, institutional buyers, investors like that, putting a pause on things, it does make me stop and reflect, like, all right, what is going on? But I know they cited, the appreciation is not there like it was. When I had them buying other homes, they were going well above list price, and now they've completely changed their strategy, which I understand. They're in it to make money and not necessarily a home for themselves. So I haven't seen them liquidating any of the properties they've purchased yet, but it's just a nice, something to pay attention to in this shifting market. I do want to read over this from the Cromford Associates and Cromford Report. Now, I could put it in my own words, but I think they did a really good job. So it says, there is currently an interesting difference between the strategies of the two main iBuyers in the greater Phoenix area. Opendoor has roughly 2,520 homes in inventory and only sold 151 in July. That means they have almost 17 months of inventory. Holding costs start to mount when you have that much in stock, to say nothing of the interest on the money tied up. You can see that they are motivated to sell because they're disposing of many homes well below and giving some buyers substantial closing concessions. For the 47 homes sold since August 10th, the average gross profit made, the difference between the purchase price and the sales price, was minus 4.4%. But hold on, it gets better. The average concession was 6.1%, and the average buyer's broker comp was 2.24%. This means overall gross margin of minus 7.25%. Now, this does not allow for the fee charged to the seller, which is not public information. So Opendoor lost on average, a little over 7% of the homes they closed on, which is pretty nuts. In the same period, we saw only 7 homes sold by OfferPad, since they seem to be less willing to take a lower amount. They're just holding on and praying. They have around 495 homes in inventory, which is around 11 months of inventory that they have in their possession. And they're not being as generous with their buyer broker comp, and the gross margin, they're still at around a 2.8%. So they're still up around almost 3%, but they're not selling as many homes. They don't have as many, but we'll see what happens there. All I know is most of these iBuyers are becoming less and less aggressive with their purchases. So we'll see what happens. I mean, Phoenix is kind of a testing ground for a lot of these iBuyer markets. So will places like Opendoor, OfferPad, Zillow already stopped theirs, Home Partners of America, what will their future look like? Will they still buy homes that are premium, or are they going straight discount route? So if you're considering using one of those programs, for some situations it fits great, but if you're a seller, really look at all the fees entailed when it comes to making those agreements with those iBuyers. But that is really what we have going on now. Things are changing, inventory's up, but home prices are, they are falling some. So if you're a buyer looking to get a deal, now might be the time for you to at least explore that, see what it looks like. And if you're ready to make that move, give me a call. I'd be happy to help, or text or email, that works too. But let me know in the comments. Let me know, what do you think is going to happen? Do you think a full-out crash is coming? Do you think prices are going to rise? Do you think it's just going to be, balanced? What does the future look like in the real estate market? You can tell me what it looks like in Phoenix or nationally, but I'd like to hear the different opinions other than my own. And watch these 2 videos, and I'll see you on the next one. See ya.